Good morning. This is Dave Wharton. Welcome to the Evergreen Experience 2020 on this Friday, June 19th, 2020. The goal of this conversation is to provide real-time insights into Evergreen leaders' experiences and innovations in this period of crisis, uncertainty, and rapid change. Today, I'm joined by John Burns, CEO of John Burns Real Estate Consulting, and Todd Govig, President and CEO of Govig Executive Search. John and Todd will share their experiences leading and adapting their consulting and professional service companies through the COVID-19 pandemic. In addition, John will share his current views on prospects for different sectors of the real estate industry, and Todd will share his insights in executive hiring across industries. With that, let's get started. Good morning, Todd.
Morning.
Morning, John.
Morning, Dave.
Good to see you guys today.
You too.
So, hey, Todd, can I start with you?
Sure.
So how about if you could share a little bit about your background, a little bit about your company with us?
Our company was founded in 1978 by my parents, so we're second generation family. We just celebrated our 42nd anniversary this month. I've been in the business 33 years. We're in the executive search space. We have 75 employees currently based here in Scottsdale, Arizona. The niches we work are on a nationwide basis: biopharmaceuticals, healthcare, which for us is senior housing, assisted living. So that's been interesting through all of this. Behavioral health, which is again interesting given what's been going on. And then on a regional basis, we kind of do a little bit of anything and everything with a focus on real estate, commercial development, construction, building products. Just based on that's a big part of the Arizona marketplace. So we're in our fifth decade, plan to be around another 5 decades. We've considered ourselves evergreen before we heard of evergreen through Tugboat, and we feel fortunate to have stumbled into our tribe at Tugboat, and we're honored to be a part of the Tugboat community.
Oh, great. Thank you, Todd. John, similar question for you, a little bit about yourself and your company.
And similar, stumbling on Tugboat. I love Tugboat. I started the company 19 years ago. I was a real estate consultant, and the housing part of real estate was just insanely cyclical, and everybody'd make a fortune and then give it all back in bankruptcy. And so I started a company to help people navigate the housing cycle and the residential business. So we've got large home construction companies like Pulte Homes and Kohler and Home Depot and Fidelity Investments, people that trade securities. And we have a research subscription business. So think of us as like a Forrester or Moody's Analytics focused 100% on housing. And that's where I spend most of my time. And half of our business is a consulting business. So think of it like maybe we're not quite a McKinsey. I'd like to be a McKinsey, but just really knows the industry. And one thing I should probably add as we go into this is our definition of people first, I think, is a little bit different than everybody else's. And I've been poking Dave. I'm like, we need to have some great discussions about what people first is. But our team is really highly paid. I think half of them make more than 100 grand a year. 90% have college degrees. I mean, they can get jobs easily. And our definition of people first is you get to work with the absolute best people. So we have a really high bar to work here. And I think that'll come back to play as we talk about this later.
That's great. Thank you, John. And I'm not going to take the bait on getting into a discussion about people first right away. But so why don't you tell us, I'm just continuing with John, how was the business doing kind of in the last year, coming into the beginning of this year before this kind of surprising crisis?
We were kicking butt. I mean, we had our annual company meeting at the end of February. It was grow, grow, grow. Actually, very much inspired by Radio Flyer last year. We had hired a chief career and culture officer, and we implemented this new hiring process, and we hired like all these great people. Our clients' new home sales were up 30% year over year, so they were doing great. And we had all these great initiatives going on.
Wow. All right. We'll come back to that in just a moment, John. How about you, Todd? How are things going 2019, beginning of 2020, pre-crisis?
Yeah, same thing as John. We were rocking. We had reinvented our entire management team, our training. We were well positioned. We were expecting 25% growth in our best year ever in the history of the company.
Wow. And then, so this unexpected external shock happened. Todd, what was the impact on your business?
We were off 30% in March from not from goal or projected, but 30% from baseline from the previous year, 44% in April, 56% in May, In June, we're seeing a little bit of a bounce back. We think we'll be 30% off, but I think some of our May business just pushed into June. So we're off about 45% cumulative.
That's a pretty serious shock to the business. So let's, and again, I'll come back to you in just a moment on this, but John, how about you? External shock.
Yeah, I think I was responsible for some of the worst scores on your weekly survey there for a while. So actually, I was surprised how well guys were doing. But new home sales, people don't really. We were focused on week by week, but new home sales were down 85% almost immediately. Our clients were getting killed. Our consulting business is highly transaction oriented. So when people are buying land and doing things, they're hiring consulting. It went to almost close to zero. The one thing I want to mention too is, I'm surprised it hasn't been more of an issue, but we were really concerned about receivables. I mean, we live off our receivable collection. The largest home builder got on the public earnings call and said, we're not paying anybody this quarter. The government is saying, don't pay your rent or your mortgage. Your financial advisors are saying, hoard cash. Everybody sent their AP departments home. So we were really scared that there was going to be no cash coming in the door on top of all that.
Wow. Yeah, John, you were one of the first people to actually raise that when we talked the other day about, everybody's saying that they're not paying those. That's my receivables.
Right. That's what I pay payroll with.
So let's just keep going with this, John. So how did you guys adapt?
So this whole remote worker thing, we call it a connected worker because it just sounds more welcoming. That has been a strategy of ours for a very long time. So it was very easy for us to send people home, get them with the laptops. That was super easy. We got everybody hyper focused on receivables collection. I've been talking about rolling out Great Game of Business now for years, and we've never done it. And it exposed us for not having that in place. Our cash balances were fine, but our forecasts, we just were terrible at them. I also learned that and I'm a CPA, so I should know this, but the balance sheet lies. We had a couple of conferences that we were responsible for all the hotel rooms, and I never thought that would really be a big issue until you can't have conferences, so we were on the hook. So we got super focused on cash. I was getting ready to announce the profit sharing from last year was huge. I had to pull it back, but we fast forwarded. I think we moved very quickly. We actually moved about 30% of our team to what I call a paid leave. We didn't furlough them because we were paying them. But we said we need to focus. I should have spun it as a paid leave. I spun it more as hey, you're probably losing your job, go find a job. So it wasn't the nicest spin. But I turned to the rest of our team who was nervous, and I'd done this once before in 2009. And I said, okay, cuts, who's on the sidelines right now. You guys are my MVPs. Let's focus. Let's get going. And man, did we focus. I mean, the relationship building via Zoom, we were already heavy users of Zoom. We were meeting with people in their house and really getting to know people, and everybody was freaking out. And we were in charge of figuring out what's going on in the market. So we had a lot of content to add. We started these weekly webinars. We've now done 15 of them to track what's going on in the industry. It's been huge. We didn't know how to lock it down on the internet, so it started spreading on the internet and everybody started watching it for free. And then when we figured out how to lock it down, all these people that we'd been talking to who were not clients came in and became clients. So our research business actually ended up growing. And then even though we weren't doing Great Game of Business, we're very transparent with our financials. So the Monday morning calls became really important. Here's how we're doing. Here's exactly how we are. The excellent internal transparency, I think. I've heard from our team, like, boy, that really made a difference for me, John. Thanks. That was great.
And then did you end up leveraging the PPP program?
Oh, big time. Yeah. And in two ways. So all the people on paid leave is, we're definitely going to pay your benefits for as long as we can. And we're going to pay you through May for sure. And if we can get the PPP, we can keep going. So they're all still getting paid today, including a lot of these folks that are way more than the PPP allows because they make more than 6 figures. But probably even more importantly, the PPP saved our clients because construction got 12% of the PPP money. And then it's kind of related, but the fact that the Fed's buying mortgage-backed securities and they've bought the mortgage rates down to the lowest mortgage rates ever, home sales have gone from being down 85%, Dave, to their new home sales are up year over year right now. Completely saved our clients, which in our consulting business is coming back because of it too. So, I mean, the government played a huge role here.
And I think you said, John, when we talked the other day that the consulting business, you said almost down to zero. Research business was down, but there's been so much strength with all this new content, these programs you've done, that you've actually been able to kind of make up for some, not all of the shortfall on the consulting side too. Is that correct?
The research business has grown. I mean, that part of our business, I modeled what was going to happen after what happened in 09 after Lehman Brothers collapsed. And that's when I said to our team, I said, we've cut enough that we can get through that. So don't worry about it anymore. But that is not the way it's played out. We've done much better than that. The consulting business is still down probably 50%, but the research has grown.
That's awesome. Congratulations, John. It's good, good adapting.
We had a little help from the government. We'll talk about that later.
That sounds good. So Todd, boy, you're down 30% year over year. March, 44%. April, 56%. May. That's serious. That's half your revenue. So curious, how did you adapt to this external shock?
Well, where we ended up was different than maybe where I started, given the pull in the market. And what I mean by that is every CEO group I'm in really was saying the narrative, which was probably appropriate for many businesses and absolutely necessary, which is cut deep, cut hard, cut everywhere, and do it now, right? And try to do it just once. And so I was getting pulled by that narrative and drift, and had started those conversations, had reached out to my landlord, had reached out to I outsource all of our accounting, and reached out to my CFO and said, sharpen your pencil and start looking at every vendor. I had my director of IT looking at every vendor and every cost. And then I put the brakes on. Our business, first of all, again, this is our 5th decade. We've seen this rodeo before. If you're truly an evergreen business, there's one thing that's predictable, and that is that black swan events are going to happen. So if you're going to survive them, you got to some point build a business model that allows you to do that. So when we came, our industry, historically, the last 3 big downswings, 50% of the firms have gone out of business, and 75% of the executive recruiters leave the industry. So we see that, and the good news is on the backside of that, we gain market share if we're able to pick up. So I really reversed course, which was hard given the pull of literally everybody I was talking to telling me to cut deep. Fundamentally, we tried to do nothing different. We tried not to change a thing of what we were doing. I didn't lay off a single person. We did not furlough a single person. I didn't cut a single salary. I didn't defer any commissions. I didn't defer any compensation. And my business is structured because I'm a high commission business. So my cost is commissions, and it correlates to income. So I have a little more flexibility than many businesses that have such high, have high fixed costs. So we've been able to do that in the past. And if I drop to 50%, we don't make money, but I don't lose money. And that's what we experienced in 08 and 09. The difference here was when we went into it in March, I thought, here we go again, another black swan event. I just think the difference is it's not going to take me 2 years to hit bottom. It's going to take me 2 months. And sure enough, in 2 months, we hit it. But we've been able to be cash flow. So when I reversed course, I called my CFO back, and I said, Liz, we need to have a different conversation. And she's expecting the hard conversation, right? I go, here's the deal. I said, send me your invoice, exactly what it was last month. Don't change a thing. Pay every vendor on time. Don't negotiate anywhere. And by the way, I need you to work harder. But I'm going to pay you your full boat, because I think we're going to need all of your help and expertise as we go into that. And they've been terrific, and they've really helped us with the PPP and other things that came forward. So my narrative was, I went to our management team and I said, our goal is to keep as many of our tenured people and our even new people as we possibly can. Much like John's business, we're a highly compensated employee base. And if we can keep them on the backside we'll experience good growth, which we did in 10, 11, and 12, where we experienced 30% a year compounded rate of growth through that period of time coming out of that downturn. So I can't talk to me in 3 years and I'll tell you if I was right. If I'm still standing.
So here's something I'm a little puzzled by. So it sounds like one of the strengths of your business model is that you've got a highly variabilized compensation structure, right? So if sales are down 50%, your team bears the brunt of that with the company, right? They're getting less overall compensation. Their salary won't change, but the commission compensation, I assume, would come down. But I assume others in the industry probably have a similar model, but you said there's incredible attrition every cycle by these other companies. Is it that your business model is unique, or are you doing something different?
I think it's real simple. We have zero debt as a business. We have zero debt as a family, and we've lived that way for decades. So we leave most of the money in the business, and as a result, we've got reserves that we're able to tap into. And coming into this, as I sat back and looked at it, we actually had more financial reserves than we did going into 07, 08, 09. And so again, this thing's far from done, and we keep getting thrown curveballs, but I told my team, we're getting curveballs, just learn to hit curveballs because they keep coming at us. But right. I think having no debt as a business makes a huge difference, not being leveraged.
Yeah, I think there's a lot of wisdom in that, Todd. And I think a lot of your Evergreen peers have little to no debt. That's just kind of one of the things that's been learned over the last couple of centuries, that if you want to lose your business, put a lot of leverage on it. So PPP, Todd, have you taken advantage of that?
Yes, we did.
Okay. And then as far as markets, I assume some industries, and you kind of gave us a list of different industries you primarily work in, but I assume that are you seeing some green shoots and new areas of opportunity for your company in this environment?
We see areas where there's going to be opportunity. We kind of lag that. The demand has to grow a little bit. And one area we have seen a little bit, and we've done some search work in already, is companies that are trying to get into online education, be it for their large organizations, they need it internally, or they're doing it with their customers. So we've placed multiple people into those kinds of roles, helping organizations build that online structure. And then our different industries kind of reacted differently. As John said, residential construction just stopped. I mean, it just stopped. And again, being in Arizona, that's a big piece of our business. John and I have talked about that before. And so we're seeing that begin to bounce back a little bit. Second home market in Arizona is fascinating. It's explosive. I mean, Northern Arizona, you can hardly buy a house. There's no inventory on the second homes, which I expected that market to totally crater. Our senior care business held up really well for a while, and then it just stalled, given all the difficulties with COVID. We're seeing that bounce back a little bit. Biopharmaceuticals, it slowed down quickly because they were so focused on COVID and looking for solutions. But now they're like, we still got to run our regular business, and we're starting to see some lift in the biopharmaceutical space. So,
great. So Todd, how are you feeling today versus perhaps, let's say, the third week of March?
Real simple. I feel like I'm proactive today, and in March I was reactive.
Okay. Yeah. How about you, Joan?
Yeah, it's 180 degrees. I mean, about 3 weeks in, we said, okay, we're done. When I got rid of those paid leaves, I said, okay, we're going on offense now, and the offense has played out really well. I just want to make a point that he said that, because it's related to Tugboat, is we had no debt either, which I thought is a great thing, and it always gets us through this. But I had a great conversation with Ami Kassar when we were in Sun Valley. He was like, you need a lot of banking relationships. That's a good thing to have. And we did not have a lot of good banking relationships. And the only one I had was Wells Fargo. And we got stuck in the Wells Fargo mess. We actually did not get the PPP money the first go around. If they had not appropriated more money, we had to go to a brand new bank and get it that way. We wouldn't have gotten it. So one of my lessons learned is I'm gonna have 3 banking relationships from now on going forward, just in case.
So how do you balance banking relationships with kind of keeping debt really low? Are you just gonna have modest
Yeah, well, with Wells Fargo, they have our credit card business.
Okay.
And, the guy who made the PPP loan, the bank that did that, they want our deposits. So, I mean, there's certain things you can do, and maybe I'll factor receivables or something small to keep a third bank happy, and we'll do that.
Yeah, I'd reiterate John's comments. We had the same thing. We were with Wells Fargo, and we got totally thrown under the bus. I was working with 4 banks, day and night, 24 hours a day, trying to get a loan through. And we got it through on Wednesday night at 10 o'clock at night. The first round ran out of money Thursday morning. And like John, I'm like, I got to have some banking relationships, because in the past they'd come to me like, well, you need a loan. I go, I don't need a loan. Right. And so I just did it. We self-bank. And now I'm like John. I got one relationship we're moving to, and I'm starting some other banking relationships. So I think John's point's extremely well taken. We need to do a better job there.
Got it. So it's not necessarily you're going to take on more debt. It's just you're going to use different parts of your business and your kind of cash relationships with different. Yeah. That makes sense. That's cool. So I guess my last question for you guys, kind of rounding into this section, would be it's kind of the crystal ball. And I'll start with you, John. When you look into your crystal ball, what do you think is your overall view for the recovery in your business and its related industry? And then if you have perspectives on the overall economy, because real estate's such a big part of GDP, I think people would be curious.
Well, that's what we're paid to do. So we're paid to figure out the economy, and we actually have forecasts on everything. So, we're planning for a very long recovery because this virus is going to be with us for a while. And I don't want to get too political here because I'm not a political person, but I'm now predicting what's going to happen in what I call the artificial economy, because everything's being propped up by the government. It feels like we've gone from a capitalistic society to a socialistic society where the government's all in to help businesses, and unemployed people are getting the equivalent of universal basic income. And so far, it doesn't look like there's any repercussions for that at all. And the government's all in to keep mortgage rates really low, housing to lead the recovery. They're not going to foreclose on people. You can't evict tenants. So it's like all the old rules don't apply. Mm. So it's a new playbook, and I'm assuming that's the new world. For our business, the locking everybody in their house, particularly in a house they didn't really like, caused a boom in remodeling while they were in the house. Paint sales were up dramatically. And as we open up, it's causing a lot of people to want to move. Hey, if I got to get locked in again, I want to be in a home I own, or a nicer apartment, or something with a home office. Home office is going to be a big change here too. So, we're focused on a very long recovery with very low interest rates. And I actually think these government subsidies, as they come in or out, are going to make a huge difference. So risk on as far as that's concerned.
How about inflation? I mean, all of this cash in the economy. I'm not an economist, but some people would argue that this is the kind of thing that leads to hyperinflation someday.
So I thought that too. And then one of our first webinars, I said, this is my main concern. So one of our employees actually has won 6 Fed forecasting awards and did a whole 20-minute part of our webinar on inflation versus deflation, which we made available to the public. Anybody in Tugboat can look at it. It's an amazing education. I think it's deflation is the consensus now. And that's what the Fed is fighting, is things getting cheaper, not things getting more expensive. So it's the exact opposite. And I think my personal view is we would have had a lot of inflation if there was another currency in the world that was better than the US dollar, but like the US is bankrupt and every other country is more bankrupt. So it's just really this really weird world that we're in.
So a minute more on that. What happens in a deflationary environment? I know Japan's been in that was in that for quite some time. Is it that people aren't spending money because their money's more valuable in their bank account than actually buying something? Or how's that work?
Well, it's easy for me to talk about it in housing because I think everybody can relate to that. But during the last recession, the value of your house was going down, and the cost to build a home was going down too. And it was just this kind of vicious spiral where everything was going down. I was like, well, if things are going to be cheaper in 6 months, why would I buy it now? So I'm just not going to buy it. And that's the deflationary spiral that the Fed is actually fighting right now. And, that's a generalization. There's some products I think that are going to have a lot of inflation due to shortages, but right now the issue is more exactly what you said, people hoarding all this cash that's been created and not spending it.
So
And
they don't do the
particularly
remodel.
spending,
They don't buy
well,
the car. They don't, they just wait on those things.
well, with a 10% or 13% or wherever we're at, 13, I guess, is the official number, unemployment rate too, people aren't getting raises, and raises cause costs to go up, and that causes inflation. It's actually going the other way down. I think a lot of these people that got let go are going to come back in at a lower, lower salary than they left. That's deflationary.
Thank you, John. So Todd, kind of sitting where you're sitting with your crystal ball, kind of thoughts on your overall industry, its recovery, as well as the broader economy.
So I'm probably on the bullish end of things. I don't know how long it's going to take to recover from our perspective. So I'll address it more from the employment lens that we look through every day. I think it's easy to forget today how low unemployment was in February. We'd been preaching it for a decade, but every employer recognized at that stage that it was hard to get good people, and it was important to keep them. And there's a huge scarcity, especially in white collar, mid-level management and up types of roles, which we focus on. So I don't think that has fundamentally changed. As I've talked to CEOs around the country and our client base and other networks, most of the companies I've talked to have used this as an opportunity to clean house where they needed to clean house anyhow. I talked to one large employer. He says, yeah, we're letting 1,500 people go. Don't tell anybody. We're never bringing them back. They were the low hanging fruit. And we figured out how to do it without them. And our business is going to be better and more profitable on the back end. So I think companies have gotten leaner and tougher. But fundamentally, there's still not enough nursing home administrators to go around. There's fundamentally not enough chief medical officers and biomedical research firms to go around. And so I think there's going to be still competition. What we have seen happen is the marketplace has changed and opened up. Companies are much more open to interviewing somebody via technology such as Zoom. We've had clients hire people without ever meeting them face to face. The first time they meet them is when they come to work. We've had companies become much more open to having people work remote. And so if you're in Boston, a biopharmaceutical company in the past, we'll only interview people that can live in Boston. Now we're like, if they're qualified and they're in Texas, we'll talk to them. And we weren't seeing that before. So I think there'll be some changes in opening with that, of a lot of us having worked remote at this stage.
Todd, that's actually really interesting. So that might open up people's kind of search circles significantly, using your kind of Boston example, right? I guess in some ways, the entire country, if not the world's available for hire at that point, if you're willing to go 100% remote with an employee, right?
I think it changes it dramatically. And I think the other shift, which moves more into John's area of expertise than mine, but I speculate, especially given some recent events, that you're going to see a flight from large cities. And I think small to medium-sized cities in the United States are going to do really well.
And are you seeing any kind of a shift in kind of what people are looking for as far as key executives? Or, has this kind of led people to say, I need a chief adaption officer or innovation officer, or I need a new head of HR that's an expert in dealing with culture across multiple locations and individual homes? Any kind of shift in the mix for key execs?
Haven't seen the shift yet. We've heard a lot of conversations about it, but the marketplace tends to lag that conversation in terms of actually hiring and making those changes. Again, the biggest one we've seen, the earliest one we saw was, we need somebody to help us get online education going for our company. That one we've seen already. The other shifts, we've heard discussions, but it's lagging still.
Okay, great. Well, Todd, John, this has been terrific. I really appreciate it. Thank you so much for kind of sharing your gift of your experiences in this crisis with all of us. Thank you very much, guys.
You're welcome.
Thank you.